bring in Kevin Green, senior markets correspondent, to help set up the action today. And just, I think it would be remiss not to, KG, I forgot you're in Chicago, even though we talked about it. I love seeing you in there. Okay, so before we dive into kind of where futures are today, talk to us about what some of your takeaways were yesterday, especially when you saw just that momentum. I mean, even some of the stocks that started out under pressure earlier in the day joined in the rally. What were you paying attention to across sectors? Yeah,
so you did see actually a broadening rally yesterday here, Diane. But if you kind of look under the hood, we still actually saw a pretty light volume overall. And so we do have the price action moving higher, but the volume is really not complementing that. But obviously, price is going to be king. And we can continue to see this type of movement to the upside here. I would say, getting up to that 5,900, 6,000 level is going to be a very key area for this market. But we have not seen any type of cooling, and we do have a couple of gaps to the downside if you're looking at the technicals. But you are seeing some optimism, especially when you're looking at the industrial sector. I think that's actually the leading sector year to date so far, and you are continuing to get some really good news. I know we'll talk about Boeing here in a second, but overall, I think not seeing this rally really being concentrated, I think, is a key thing. But we are seeing some fairly light volume. I think we just have to be mindful of that over the next couple of trading sessions.
Not concentrate, but one of the things we're paying attention to is Mag 7 recovered some serious ground yesterday. You had Apple, Amazon, Meta, all of those just regaining some ground. But again, to your point, it was broad-based gains. We pushed through some key levels that you were paying attention to on the S&P 500, ultimately finishing at 58.44. But we pushed through one of those levels you were looking for, 57.50, and even higher than that. So where are you looking for when it comes to the levels today?
Yeah, we continue to inch higher here. And so looking to the upside, looking at around 5,900. Now, the JP Morgan collar, they have basically a hedged equity position. They have a short call position sitting at around 59.05. So a lot of option traders, those that look at flows, are going to be looking at that level. So that might be a really sticky area of resistance for this market. And then to the downside, looking at 57.50. We do also have several gaps on the S&P 500 to the downside that could be tested. Usually, some people say 80% of the time gaps get at least tested here. So we have two of them to the downside. So 57.50 to the downside, 5,900 to the upside here. Let's see what actually happens with the inflationary number too. I mean, a lot of traders probably will discount it for the most part, but this will be the first inflationary print that we have on the CPI basis that will reflect some of the Liberation Day impacts. And so I think autos are really going to be in focus here if we do see a massive spike to the upside when it comes to prices there.
I'm curious to know your thoughts on this. To what degree do you think that the markets are pricing in, or were pricing in, a full resolution to U.S.-China trade policy?
Yeah, I think the market right now, we might have overshot to the upside when it comes to the optimism. Obviously, I think the market was really kind of pricing in tariffs coming down to around 50%, or being cut to around 50%. Seeing them dramatically lower from there obviously gave us a little bit of enthusiasm to the upside. But we also have to just be a little bit cautious. 10% or 15% or 30%, no matter what it is, it's still going to be economic slowing in some respects. It will have an impact when it comes to earnings, and it will also have an impact when it comes to earnings multiples. So we have to be mindful of that moving forward. But the market right now, once again, they're enthusiastic. They're looking through a lot of this data for now, but it just... What's going to happen 2 or 3 months from now, I think, Diane, is going to be the big key area. Do you start seeing inflationary prints getting a little bit hotter and hotter, and then do we continue to discount them, or do we actually recognize or notice maybe some slowing in the market? I think that remains to be seen as far as the potential catalyst for a pullback here. But for the summertime is actually fairly bullish for the market.
Okay. Do you think, though, that today's CPI print will matter that much?
I think it will in some respects. If you see it in certain areas and it's very aggressive, if you're looking at like the used car prices, we have seen some third-party data that has actually moved to the upside. That could actually have a pretty decent impact when it comes to prices in general. And then if you actually look at the gasoline, or if you're looking at the energy portion, which is around 8.5% of CPI, we have seen prices on the futures market actually moving to the downside. But if you're looking at retail gasoline prices, they've actually stayed stagnant. If you look to the south, say like in states like Texas, gasoline's actually gone up. And so I think that's going to be probably one of the bigger wild cards, that the market's probably pricing in a lot more deflationary pressure there. But that might not be the case if you're actually looking at it on a retail basis, or what the consumer feels on a day-by-day basis compared to what we see in the futures market, like RBOB and WTI prices.
Yeah, look, I just checking. It looks like WTI is a little bit higher this morning. I will say I got a nice price when I filled up at the pump yesterday. But what are you paying attention to when it comes to the levels for crude oil?
Yeah, I think $65 is going to be the key area for us to be able to try to recapture. When you break $65, it's really kind of that economic slowing. I wouldn't call it a recessionary level yet, but an economic slowing level that we do have to be mindful of here. And so recovering there, I think, is going to be key. We also have a significant amount of short positioning when it comes to WTI crude. And then also looking at the diesel prices. Diesel inventories are actually at relatively historic lows. We're at basically COVID-19 lows when you're looking at inventory. So there's not a lot of wiggle room here. So if we do get a boost in economic production and consumption here, or we get an increase when it comes to imports, which we should be expecting because of this pause in tariffs, that's going to increase diesel demand, especially when you're looking at locomotive and rail. And that could actually push prices even higher here, which is actually going to be a benefit for refiners. But the byproducts definitely have tighter supplies than crude oil is really kind of reflecting when it comes to price.
Okay, and let's talk a little bit about Boeing. We've got some news around Boeing. Shares moving a little bit higher in the pre-market. What's the trigger here?
Yeah, so we are seeing China removing the removing the ban on deliveries for Boeing jets here. This has only been in place for about a month. It had a little bit of an impact when it came to Boeing's stock price here, but they have ended the month-long ban, and now Chinese companies are able to take deliveries of Boeing planes. Now, this is probably going to impact around 50 aircraft, give or take. That's what it's expected to be delivered in 2025 for Chinese airlines here. And when you're looking at the China market compared to Boeing's revenue mix, it's around 18 to 20, 25% of their total revenue. So it does actually have an impact here. This is also pushing prices higher. We're getting close to that $200 level when it comes to Boeing. But this is just another sign of the positive results that we saw from the discussions over the weekend. Once again, it's not actually an inked deal, but you are starting to see maybe some concessions being made, and Boeing obviously being a really big bargaining chip for the market here, for the United States. Seems like they're going to get at least a win here with this announcement.
Yeah, and I mean, look, shares of Boeing have outperformed the broader market year to date. What are you paying attention to when it comes to the levels on Boeing?
The $200 level, if you're able to actually sustain and break above that, that's actually a breakout level to the upside for Boeing. It's been a long time coming when it comes to trying to maintain some of these levels, but Boeing has been a company that has been consolidating, let's say, for the last year and a half, and now it's trying to attempt a breakout. And this might be a company as well that has a different vision. They have a new leadership style that is out there. They might have been able to restructure a little bit of their debt. Profit margins might be intact here. So there's a lot of optimism for this name.
Yeah, certainly it seems to be the case. And this year seems to be, a new chapter for Boeing, especially compared to how difficult last year, capping a string of bad years for Boeing. All right, let's talk a little bit about Coinbase. Coinbase shares gaining some ground here, rallying today off the back of this news that they're going to be added to the S&P 500. Can you fill in some of the details here, KG?
Yeah, so you are seeing a nice little pop to the upside. So Coinbase is actually be joining the S&P 500 starting on May 19th. So Monday of next week here. It's going to be replacing Discover Financial, which is obviously being acquired by Capital One here. Now, you kind of highlighted some of the stringent guidelines that you have to have in order to be able to be included in the S&P 500. And Coinbase was actually able to meet those. 4 quarters of profitability and the latest quarter being profitable as well. Obviously, we've seen a lot of enthusiasm when it comes to cryptocurrency and cryptocurrency-related equities over the last couple of months. Because of the move to the upside, Coinbase is also seeing a little bit of a tailwind there. So this is just another inclusion that gives S&P 500 holders, those that hold the SPY or hold a mutual fund that tracks the S&P 500, some crypto exposure here. And this has been a volatile company because of the new pricing rules when it comes to Bitcoin and some of the inventory levels here. But overall, it's been able to hold up pretty well.
How meaningful is this inclusion for, say, Coinbase to be added to the S&P 500?
So, you can go back and look at some of the data here. Obviously, you're going to see a bump to the upside here over the next couple of weeks because you have this rebalancing effect, and institutions have to get exposure and try to balance as closely as they can to the S&P 500. So it can be a tailwind. Also, you have passive flows. So those that buy in, a mutual fund in their 401k every week or every 2 weeks or what have you, a slice of that's going to to be put into Coinbase. But we have to also be mindful the company still has, it doesn't mean that it's going to skyrocket from here. We've seen a lot of times where companies get included in the S&P 500 or the Dow Jones Industrial Average, and then they don't perform as well. So initially, you trade on the news or you trade on the rumor. Usually after the news hits the market, it kind of, you don't really see a very strong correlation to the performance.
And it's well off of some of the highs that it had several years ago. And one thing that's interesting is Coinbase is not trading in lockstep with the moves that we've seen with Bitcoin. I'm curious to know what you're paying attention to with the patterns and levels on Coinbase, KG, or any other takeaways you want to leave us with.
Yeah, so for Coinbase, they're going to be trading on the transaction volume. And so we have seen volumes, for the most part, become a little bit light. And Coinbase has a little bit more exposure when it comes to retail traders rather than institutional traders. And when you're looking at the flows in cryptocurrencies in general, especially when you're looking at Bitcoin, 80% of those flows are coming from institutional traders. So what you would like to see is a little bit more adoption on the retail front, a little bit more volatility when it comes to cryptocurrencies in general, and then the continued expansion when it comes to institutional holdings as well as compliance, because Coinbase does have some exposure there. But you're not going to get a one-for-one relationship when it comes to Bitcoin or Ethereum compared to Coinbase. It's just a
Got it. All right. That's Kevin Green, a senior markets correspondent, joining us from Chicago. Shares of Coinbase right now rallying more than 10%. Thanks, KG.